Good afternoon, Quasar Markets Live. I've got my friend here from the Schwab Network, Kevin Green, the senior correspondent. Man, listen, Kevin, 3 weeks ago, the world was ending and tariffs were going to be everywhere and things were just bad. Talk to me a little bit about the mood now.
Yeah, I mean, I think you are seeing a little bit of a tone shift, especially today's price action. I think kind of solidified that. Now, personally, I am still looking at this as a counter trend until things, until the price level changes, and that's just how I am when it comes to this. But a couple of different factors have definitely taken place today. The first thing is obviously VIX continues to move to the downside here, volatility just in general. I think we're sitting at around a 17 or 18 handle right now, still implying about a 1% daily move for the most part. But the key that I'm actually looking for that gives me the real bullish case right now is actually VVIX. So vol of vol has actually dropped to the lowest level since July of last year. And that's probably one of the fastest rate of changes that I've seen as far as VVIX kind of moving to the downside. Now, we were at one extreme to the upside. We're getting closer to that bottom quadrant to the downside here. So I kind of say, given that fact, it is bullish. Vol is getting cheap. If you are concerned and you think that might be something else that's on the radar, vol is cheap. If you kind of go out, the normalization of the curve is definitely intact. We lost that backwardation officially today. If you're looking at spot VIX, VIX minus the front month futures contract here. And so I think we probably may see another couple of trading sessions at least that are going to show green on the screen. And it's would have been an outlier even for last week for us to actually have a red week. We rarely have 5 weeks in a row that are red. So a nice little bounce to the upside. I think the tone's changing. Donald Trump's tone is changing as well. So we have to be mindful of that. The market is not pricing in, and I don't know if people have gotten this yet. The Venezuela aspect of the tariff policy is actually very unique because that's really being directed towards China. China is a big importer of Venezuelan oil. Now, Venezuela does not export oil like it used to. The infrastructure is just not in place. They have a lot of things going on internally within their country. But China is an importer of Venezuelan oil. And so Trump's comments today made it seem like, hey, 20%, you add another 20 or so, you're talking 40, 45% tariffs on China goods. I think the market's going to call the bluff on that because it's very aggressive. And I think that's probably what you're seeing right now. But the fact that he's kind of giving a little bit of leeway when it comes to tariff policy right now, and that might be because of two things, and I'll kick it back here, but kind of think of it. You've worked in the White House. You've had these how hard it is to try to tariff everything and have reciprocal tariffs and try to track everything and make sure everything's on the up and up. One, it's very difficult. Two, I'm sure some economic advisors, also maybe that Fed meeting last week, may have said, hey, you might want to kind of cool the jets a little bit on this conversation. Let's ease into this maybe a little bit more because you could create a very significant snap when it comes to prices and inflation in the near term, and it would make it also a little bit difficult for the Fed to cut. And I think that's really what it wants to do.
That's a very good question. I mean, the USTR's office, U.S. Trade Reps office, is right across the street. And, when they walk across the street, they don't come into the White House thinking that we're going to tariff the whole world, whether that be Europe or Venezuela in this case this time, or we're going to hit automobiles and we're going to hit corn. And it just seemed that 3 weeks ago that he wanted to tariff everybody. And today they're really pulling back on that tariff. I think what the USTR's office said, cooler heads are going to prevail. Is that the prevailing winds that are saying, okay, all right, the markets are okay. We're not going to have this huge tariff war. Everything is fine.
I think so. And rightfully so. The risk is, I mean, if we were going to tariff everything, that's going to be a lot. I mean, it doesn't even matter what political side of the aisle you're on. That's a hard pill to swallow here. And I think the market is saying, okay, it seems like there's some wiggle room taking place. And here's another key. I believe he brought up the EU. The EU is going to reduce some of its car tariffs. I don't think it's by much. I mean, marginally, it's probably a lot, and he had that as kind of like, here's one of the reasons why. And it's like, oh, okay. So like they're moving it down to 2.5%. Like that doesn't seem like a huge win. But if that's going to be the one thing that you kind of highlight for the reason why you're backing it off, I feel like personally, it's more of an implementation problem rather than I just want to tariff. I mean, he still probably wants to tariff everything. but it's probably going to be way too difficult logistically to do so. And then also the ramifications. Let's talk about a Chile. Are you going to tariff the heck out of Chile? I mean, at the end of the day, they're one of the biggest exporters of metals here in the United States, as well as some of the grains and things of that nature too. You're going to destroy their economy. And then for us, we don't have anywhere else to go. You can't just build out a mine in a matter of 3 months, 6 months. That stuff takes a year, regardless of the regulatory fast tracks that you can have. Just getting the infrastructure in place in general is going to be very tough. And let's talk about the LNG side too. Let me just hammer this home real quick.
Yeah.
You raise steel tariffs and copper tariffs. There's a lot of these companies that are focused in the LNG, liquefied natural gas space. They're not going to build out because you're going to talk about it raising their costs to even just to build out these regasification units, these export facilities and things of that nature. And their price for that's going to go up 20%. I mean, the majority of the input is steel. So I think there's probably a lot of people that said, hey, let's kind of slow roll this a little bit.
And I'm looking over right now at Cheniere Energy right now, LNG itself. I mean, that stock's been straight up. I mean, it seems that, yeah. Oh, my goodness. Yeah. Oh, wow. Yeah. So, okay. 3 weeks ago, the markets just seemed to be falling out of bed. We had a second ago. And I saw the capitulation. I saw where I thought it was a smaller flash crash. It wasn't a major flash crash, but it was enough to get people that were on the sidelines, the Warren Buffetts that were going into cash. There is a lot of cash on the sidelines. I mean, it's probably the most we've seen in, I'd say at least two or three years at minimum. What is going to get the institutional money off that sideline back into it outside of the tariff war? Is it going to be something like saying, hey, rates are going to come down, or Ukraine issue is being satisfied? What is it going to get these bigger institutions off the sidelines?
So are you referring to the money market asset? Okay. Yeah, no, that's actually a really good question. I think there's going to be a couple of things. One, rates going lower, because it's still attractive to be in cash. If you have billions of dollars and you can get 4%, let's just even call it 4% on that paper, it's looking pretty decent right now. So that's one thing. Two, I think there's a little bit of a distortion when you're looking at the assets that are just sitting in money markets right now. A lot of those funds are also business capital. And so I think that you'll see that money being deployed, but I don't think it's all of it's not going to get deployed in the equity market. A lot of it will be deployed in CapEx spend, real estate transactions, development. But I think once you get rates a little bit lower, it'll make it a little bit more attractive for that cash to get out of the sidelines. Yeah. So when you kind of look at that bundle, and I know there's a lot of, I think the Fed also has kind of this number. It's like, look how much is in money markets. If you look under the hood, a lot of that's the cash is sitting on, let's say even a JP Morgan's balance sheet right now, and they have a whole bunch of capital there. JP Morgan's not going to take the capital and put that into equities, right? But they might put that capital to work in other sides of the
What about private equity?
Private equity, I mean, that's still an attractive business. I know it's unfortunate that retail doesn't really have that much exposure to that business. But if you're looking at private capital just in general, and being able to fund a lot of these smaller niche type of industries like artificial intelligence, which I know a lot of people say, oh, okay, that's very saturated. It's very saturated for the companies that we are focusing on because we don't have a lot of opportunity to diversify out of the AI space, right? You have the Palantirs of the world, you have an NVIDIA, you got maybe an AMD, and then that's pretty much it when you're looking at retail capital. But there's a lot of private businesses that are still doing a lot. And you can issue and provide capital and ask for 7.5%, 8% year-over-year return on that investment, just kind of like issuing a bond to and it's been very profitable, and that continues to do so there. So I think there's definitely cash on the sidelines. We will see some money being deployed. I get a little bit, once again, you're a student of history, I'm a student of history. Could this be a regular old 10% correction? It's innocent until proven guilty. And so I would say that has to be your base case for now. But you also can have longer cycles. And I don't know where we're at with that. It just seems a little bit unique. The only thing that's kind of really throwing me off right now is the fact that the economic data looks okay, but it also kind of looks a little shady too, the stagflationary nature of it. And we don't know what is transitory and what is not transitory. People hate that. And so I think you play the bounces right now, tight stops, get some exposure. Long-term accounts, you should have been dollar cost averaging when we hit 5,500, right? I mean, that's. But if you're short-term trading it, I still am of the camp of you get in, get out, move on to the next trade. Don't sit and overstay your welcome, because who knows what's going to happen.
And that's interesting. You say the word transitory. I thought that was not on my Fed bingo card for Wednesday. For him to say that, he said transitory once again.
Yeah. I think it's in two different contexts. It's a dirty word now. Transitory back then was prices being elevated because of supply chain issues and logistics and supply shocks that he thought that would normalize. And just the normalization of those markets and those supply chains just did not happen fast enough for the market's expectations. The transitory that he's kind of talking about now is tariff policies being, it will be transitory. And I think you can make the case that, yes, you have a one-time bump in prices. If it's going to be a one-time hike, you have a one-time bump, but over time, tariffs will be, will destroy demand at some point. Because if you kind of look at it, wages will not be able to keep up as quickly because it takes so much time to actually build out or to onshore. Onshoring takes 5 years, 7 years, 10 years for a lot of these companies. Even the commitments that you're talking about now, and companies, we're going to spend $20 billion on this new plant, and we're going to build this out in X, Y. Look, these companies have a lot. These companies can stall out this White House.
Yep.
And we've seen this happen before in the past, for not only just the Trump administration, don't get me wrong, the Biden administration, the Obama administration, the Bush administration, out from Reagan, you go back in history, people can commit to a lot of things, but how much is actually going to be worked? And I would say that a lot of these dollars, hopefully they are being spent, but by the time the Trump administration's over with, we're probably just breaking ground and laying cement down.
Yeah, let's talk about that. In the White House, there is a certain guy named Elon Musk. Stock's up 12% today on Tesla. A lot of that cash might got deployed to Tesla here, right?
Yeah, I think short covering, 1, 2, maybe some cash being deployed, 3. You have the backing of the executive branch. I mean, this is a hard stock to short. I don't know. I think you and I maybe talked about this on a Spaces or what, but this is a hard stock to short here. And technically, I did this. I did a segment on this on the Schwab Network last week. It technically looks good.
Yes.
You could take a shot here. The risk reward wasn't that bad. You were sitting at $220. You go back and you say, okay, well, what happened back in October? You had an island of price for 2 weeks and that thing rocketed back up. So it's kind of like you could take a risk reward shot to the upside, and the premiums, man, were so cheap. I usually don't talk about trading. I can't talk about my own trading, but let me just say this. The $10 out of the money calls on Friday, expiring for this week, we're only going for $1.60.
Oh my!
I had my eye on them, and it's like, $10
now.
It was like $10, it was like $10, $12 out. They're only going for like $1.60 because premium on the call sides were really depressed.
And you look at it from the Max 7 side. I mean, Nvidia now also up 3% today. I think Apple was up. It just seemed that everything seemed to be oversold, and today was the day that everything kind of bounced back a little bit. What happened over the weekend? Was it the guy getting arrested for vandalizing Teslas or was it the Trump talk? Well, I mean, what was it that just made people feel, you know what, I gotta go buy Tesla today?
I think it's 1, I think it was oversold. 2, he had a all hands meeting on like Thursday, which honestly, and I'm going to get some flack for saying this, but if you're getting a 2.5%, 3% bid on your stock because you're doing a basic all hands meeting, that's when you know that you were getting kind of close to a near-term bottom. You're doing like the bare minimum of, hey, let me talk to my employees. Let me try to calm these individuals down. Don't sell your stock. If a CEO tells you not to sell your stock, 1, I'm always skeptical of that. Right. I'm always skeptical of that. But that day you saw a 2.5%, 3% move to the upside. Then you look at it over the weekend. You had the Wall Street Journal report that came out. I think that just brings you some bullish spirits there. I think later on today, about an hour ago, the FBI announced some task force to go after these individuals that are, I think Kash Patel set something up. So I think it was just a culmination of that. If you're looking at risk, any risk on trade right now, heavy risk on trade. I mean, Oklo kind of getting hit after hours because they had a
Yeah.
Business update, but like look at like a CEG up 2.7% today. I mean, you look at a Palantir. What was Palantir up 6%? Oklo was up over like 13%. I mean, anything that had a hint of being risk on caught bids today. GameStop up 3.5%. Carvana, I don't even know where that's at, up 11%. I mean, it just, you throw a dart at the board, anything that you thought was really risk on, it caught a bid.
So when you see that much buying, you almost got to think, hey, is it ETFs that were buying? They were buying little bits of everything, or was it just individual stocks again?
I still think it was a little bit of a short covering event today. Yeah. I think there were some new dollar longs that were taking place, and we'll get updated open interest for the E-mini S&P 500 day, tomorrow. But the thing is, like, volume today wasn't that great. Actually, it was kind of the lowest volume day that we saw in the E-mini S&P 500 since the 17th, which was what, Monday of last week? Yeah, Monday of last week. So very low volume on E-mini S&P 500. SPY looking like the same here. I think this is short covering, maybe some dollars getting in. A lot of options flow today as well, and options can pull markets. We had an OpEx on Friday, $4.4 trillion worth of premium rolling off. And seasonally, after OpEx for March, seasonally, vol just drops.
Yeah,
it's just what it does.
749 right now, and you know, But I say that, Kevin, I give you a little pushback. I mean, the gold ounce right now, 30.14. We haven't dropped below 3,000 yet.
Yeah, but it wasn't bulled up today. I mean, gold has been trading with S&P 500
a little bit, yeah.
Right, and so until we had this breakdown in the S&P 500, but like before that, gold was trading as a risk-on asset. Now you had some other things there, central bank buying definitely taking place, the repatriation, the movement from the LME over to COMEX, those that kind of just look at gold maybe don't understand, like, that was actually a very big deal. That was basically a physical short covering event, which is very rare. That would be like the equivalent of, let's say, like Europe saying, you know what, we're buying everything natty to fill our inventories right now today because we're going to war type of scenario. And so that's something that's very odd and not out of the ordinary. I will say, though, if you kind of look at it, the last 3 trading sessions on gold, 2 hanging man candles. What was today's candle? Because I know today wasn't looking too hot as well. You got to like maybe a little bit of somewhat of a doji, I guess. But gold had a little bit of a pullback. I would have expected that with the S&P 500 up 1.8%, gold would have probably caught a little bit more of a bid. But we go back and say, okay, what if the tariff risk is off? And if the tariff risk is off, what should happen? Dollar should actually stabilize a little bit. Maybe that gold trade fizzles out a little bit or stalls out. I'm of a belief that gold should actually be pulling back here. I wrote about it a couple of weeks ago. It did pull back about 6.8%, but then moved higher. I'm kind of surprised it's still at these levels.
I'm expecting gold back to 28.50 somewhere around there, 28.60 somewhere around there. You're right. The Dixie at 104.30. I mean, are we going to see a push to the upside here with the dollar and the tariffs laying off and Trump backing down a little bit?
I think if you're looking at the Dixie right now, I would say upper end resistance for me that I'm looking for is 106.2 there. So a little bit more of a move to the upside. I don't think we're going to see this massive unwinding and then we're sitting back at 110 levels for the dollar index. I think that's a little bit too aggressive. I mean, even if you kind of look at just the pairs alone, euro kind of got off the mat, got very close to parity. Canadian dollar was at extreme levels, and the Canadian dollar actually does have 4-year cycles because of the stuff that we are seeing right now. So you're seeing that kind of back.
I mean, it's going to be an interesting thing. All right, I'm going to let you go here. I'm going to ask one last question. Final 4, who's going to win it?
Oh man, I don't know, man. I don't even know. I don't know. I was hoping that we would get a nice little underdog. CSU got like hit with a bad, last second hit, but who knows? I'm just going for the ride.
My line I lost, so I'm not a happy
camper. I was sad about that too. So who knows what happens? But it's gonna be. I love this time of year. Really good basketball. Those guys play their heart out.
Man, Kevin Green, Schwab Network. I'll see you next week, man.
Appreciate it.